In today's video, I'm going to show you what are the best ETFs for long-term investing in the UK. And not only this, but also I'm going to show you how any savvy investor could diversify their portfolio to weather instability in the long run. So please watch this video till the end. First of all, I consider long-term investing, which means investing continuously for 10 years plus. And that's how, my dear friend, we could get the benefit of compounding interest in the long term. In my opinion, if you would like to invest for long term, then it's best to diversify your investment portfolio. In any proportion, a mix of debt, equity and gold could weather a long ride. And the cherry on the cake, like thematic fund in your portfolio, could help you achieve a very good success. But in today's video, I've tried to simplify as much as I can. So importantly, if you haven't already, then please do subscribe to my channel. So the first ETF for long-term investing is Vanguard's FTSE All World Accumulating VWRP. Yes, the ticker symbol is VWRP. That is the first fund which, if you would like to hold for a long term, you can use this fund. Even a bigger investor could start investing by just using this ETF. The main key feature for VWRP is VWRP offers a broad equity exposure covering both developed and emerging markets. The second key feature is it is the comprehensive international diversification. That means it covers more than 3,000, actually it covers 3,600 stocks from around the world. And the third feature is its total expense ratio. Whenever we choose any fund, we need to check what are the expenses or ongoing charges. So for this particular fund, although you are putting your money into the top best companies available out there in the whole world, then the total expense ratio would be just only 0.22%. So the low expense ratio ticks all the boxes. Now let's check out why this is one of those top 6 ETFs. So the ticker symbol for this fund or ETF is VWRP, and it is basically tracking FTSE All World Index, and the major investment focus is equity in the long term, and this is like taking all the world's best companies, and the fund size is 14.62 million. The total expense ratio is, as I said, is just 0.22% per annum. Yeah, the another thing is it is basically covering the full replication. The legal structure is ETF. The fund currency, obviously we will be using USD here, and the volatility, that means how volatile the fund is 11.53, which is not that volatile. But yeah, up to a certain extent, you can say that, yeah, it is a little bit of volatile. The 3 years annualized return is 12.55%, and 5 years annualized return is 11.19%. Now, when this fund was started, the first date when this was listed was on 23rd of July 2019. Yes, it is accumulating, so that means we won't be doing that hustle of distribution stuff. This fund is domiciled in Ireland, and the fund provider is Vanguard. Okay, so this is the whole scenario for this particular ETF. Now let's jump on to the second best ETF which you could invest for long term, and that is Vanguard S&P 500 UCITS ETF. This is USD dollar accumulating, and the ticker symbol for this fund is VUAG. And yeah, so these are the top 500 largest companies in America, and the expense ratio is very low. It's 0.007%. Now when we look at the historical performance of this particular ETF is very good. So it is also been backed by American certain companies as well, and in fact you could see that like big investors such as even Warren Buffett would talk a lot about this particular fund. The ticker symbol for this particular fund is VUAG, which is a accumulating version. They have their other version called VUSA, VUSA, and that is for distribution, dividend distribution. For long-term investing, I do believe in accumulating method compared to dividend distribution, because I don't want that hustle, and by doing that, that is accumulating my existing investment. So in my current portfolio, I'm doing all of them as accumulating just to make my life simpler. Okay, so let's look at this. And yeah, so this is ticker symbol VUAG. Index is S&P 500. This is investment focuses mainly equity, and the fund size is 53.55 billion, which is quite a lot. And last year the volatility, although the volatility is a bit higher side, it's 14.18 compared to VWRP. We just looked at it. Yeah, so for the last 3 years the annualized return is 16.54. 5 years annualized is 14.75, which is very good. And again, this is domiciled in Ireland. Again, fund provider is Vanguard. My third pick after USA is, well, it's India. So I'm going to discuss the Indian version of S&P 500 today. So here it is. The fund name is Franklin FTSE India, and this is ETF, again accumulating, and the ticker symbol for this fund is FRIN. So you can go to ETF screener, such as if you use just ETF as your ETF screener, you can get all the info, or you can go to Morningstar as well. That's also another very good website which I would highly recommend. I'll put a link into description so you can check further. The main key features are FRIN basically focusing on India's top large and mid companies, and these are the growing Indian market. So whatever companies which they are choosing are growing companies in the growing emerging market. So that's also a very good sign. And the second benefit is, although we are living in the UK, but still we can invest in India, which is in my opinion one of the fastest growing market in global south. Relatively, this particular ETF has a very low expense ratio. The fourth key feature is India is one of the fastest growing market in the world right now. So there is such a huge potential for growth, and it's best to capitalize right now because the market is little dip. Now let's look at its figures. So FRIN, which is the ticker symbol of this particular ETF. Now this is basically tracking FTSE India 30/18 capped, which is large and mid cap companies. And again, this is an equity, so the fund size is 1.24 billion, which is quite huge. The total expense ratio is slightly higher side, but this particular ETF, it is 0.19% per annum. The volatility is a bit higher side, 14.84, and last 3 years annualized return is 8.69, and 5 years annualized return is 10.94. Okay, this fund is also domiciled in Ireland, and the fund provider is Franklin Templeton. So this is all the information I have given about my third fund. Now let's jump into the fourth one. My fourth pick is debt fund, that is Govt.Bonds or Gilts. In UK it's also known as Gilts, and why I chose this kind of fund is it's just for stability. Now you might be thinking that why do investors park certain portion into government gilts or government bonds? It's because sometimes they fear uncertainty in the market, and they feel that it's best to park their cash into a very good safe haven so that they can get good price in the future. For long-term investors, it's best to park their cash in this kind of diversified portfolio. This not only gives a diversification to your investment, but also in the long run, this could weather the turbulence. After doing a bit of research, I have selected this particular ETF, which is iShares UK Gilts 0 to 5 year UCITS ETF GBP, and this is the accumulating version, and the ticker symbol for this particular ETF is IGL5. If you would like to know that why gilts are very popular in 2025, then please read this article by AJ Bell. I'll put a link into this description so that you can read later on. Best key features for iShares UK Gilts, which is IGL5, are IGL invests in a short-term UK government bonds That means the volatility is very, very low. And this also offers a very low risk option. The second key feature is its expense ratio, which is just 0.07%. The main focus of this particular ETF is on gilts, which maturities of up to 5 years. This could be a very good long-term option out there because it provides stability and a very regular income. Now let's look at the numbers of this particular ETF. So the ticker symbol for this particular ETF is, as I said, is IGL5. The index which this particular ETF tracks is FTSE Actuaries UK Conventional Gilts 0 to 5 years. And this is a kind of class as a bond. So the fund size is very, very good. It's 3.54 billion. So that means a lot of people have invested their money. And there is not particular information about the returns because this is relatively a very new fund, but roughly around 2 to 3%. That's what I have researched. Yeah, and the volatility for the first year is just 2.20, so it's very less volatile. And this is fund provider. This is domiciled in Ireland, and this is by BlackRock iShares, which is a big company. So this was the iShares UK Gilts. So if you are interested, then this you can keep and hold for a long term, and this is a very good option for anyone, even new investors as well. They could invest in, and it, as I said earlier, it provides a very good stability in the long run. My fifth pick is gold for the security. Now the fifth fund is iShares Gold ETC. Yes, this is not ETF, this is ETC. That means exchange traded commodities. This is also an accumulating version, and the ticker symbol for this particular ETF is SGLN. The main key highlight for this particular ETF is it offers a very good diversification. That means you can invest in gold without having a physical ownership. So it's kind of a paper gold or digital gold. And this is basically backed by physical gold vaults. So this is also a very good feature for that. Now the second most important key feature is you can hedge against inflation for any currency fluctuations. And the third main key highlight is it gives you a diversification to your portfolio. So it's always best to have a gold in your portfolio for diversification. Now let's look at its figures. So the ticker symbol for this particular ETF is SGLN. The index which tracks is gold, the physical commodity, and the investment focus is precious metals, gold, and the fund size is 15.27 billion. That means many people in the world, they do prefer this as a very good diversification and another alternative to invest their hard-earned money. Fund size is good. So now the expense ratio is just 0.12% per annum, which is very good. Again, this is physical full replication sampling and not synthetic sampling. And the volatility is a little bit higher side, 14.30. 3-year annualized return is 18.58. Yes guys, last 3 years gold has provided this much of return. Can you imagine? The 5 years return is 13.34. Inception date for this particular fund is 8th of April 2011. This is accumulating version. This is domiciled in Ireland, and this is again BlackRock iShares by BlackRock. My sixth and final pick is iShares S&P 500 Information Technology, and the ticker symbol for this particular fund is IITU. This is again accumulating version. The key focus for this particular fund is it is a very concentrated fund, basically focusing on top, I would say 60-70 companies, IT companies in the UK. So guys, let's look at the performance of this particular ETF. The ticker symbol for this particular ETF is IITU. This is by BlackRock. The index which this particular fund tracks is S&P 500 capped 35 or 20 information technology science. Now again, the total expense ratio is 0.15. At the returns, they look returns is 25.06% for the last 3 years. 5 years is 23.64%, and the volatility is so high, it's super high, nearly 24%. So this is a very highly volatile fund. So please do your own research before investing in this particular ETF. And yeah, the fund size is also decent, 8.68 billion in pounds. So this is a very highly volatile fund, but still, if you would like to have a diversification, such as a cherry on the cake, as I said, then you can invest in this particular ETF. So these 6 ETFs offers a range of investment opportunities for UK investors looking to build their diversified long-term portfolio. So this could be one of the ETFs that you might think that you should invest in. Always remember to consider your personal financial goals, risk tolerance, and investment horizon before choosing these kind of ETFs. If you would like to know how to invest your first £100 as a beginner, then please do watch this video.